Now, I want to move to another part of the world that we haven't really spoken about, and we don't really speak about, but I think we need to start considering it, especially after this pandemic. Our next speaker is Sandile Hlophe. He's a business transformation strategy and transaction advisory partner at EY. And a member of the Africa region leadership team and the market segment leader for the government and infrastructure. Sandile is going to talk to us about the growth in Africa and whether the continent can become an attractive market for the luxury sector. So Sandile, please.
Thank you. So today my topic is going to focus on the question, can Africa become a substantial market for luxury goods? And if so, what are governments in Africa doing that will facilitate this shift? But more importantly, what should investors consider when seeking to invest in the luxury goods market in Africa? So to begin my talk, what is the size of the African market, and more importantly, the size of the luxury goods market within the African continent? Almost 60% of Africa's population in 2019 was under the age of 25, making Africa the most youngest continent. And in addition, in that same year, more than 1/3 of the African population was aged between 15 to 34 years, and it is projected that by 2100, Africa's youth population could be equivalent to twice that of the entire Europe population. This is the Africa investment business case, as it presents access to the largest consumer base over the next 10 to 30 years globally. Africa's robust economic growth and booming population has given rise to an ever-expanding affluent class that underpins the growth and demand for luxury goods on the continent. And according to the Mauritius-based Afrasia Bank's Africa Wealth Report of 2019, the total individual wealth held on the continent amounted to 2.2 trillion US dollars, with around 148,000 high net worth individuals on the continent, which wealth is expected to rise by 35% over the next 9 years to reach over 3 trillion US dollars by 2027. You may ask, which key countries are these high net worth individuals resident in? So currently, South Africa has 39,200 high net worth individuals, followed by Egypt with 16,700 high net worth individuals, Nigeria at 9,900, Kenya at 8,600, Morocco at 4,600, which hopefully gives you a sense of which are the key countries and markets where there is a high concentration of high net worth individuals on the continent. The African luxury goods items that are consumed by these high net worth individuals typically are vehicles, clothing and accessories, watches, private jets, and yachts, which consumption of these goods generated 6.1 billion US dollars of revenue in 2018. This number is expected to increase exponentially, with Africa currently the world's second fastest growing region when it comes to the consumption of luxury goods, trailing only the Middle East in terms of luxury goods consumption. With that background, one would ask, so what are governments in Africa doing to enable trade and the import of these luxury goods? The recently established African Continental Free Trade Area is a strategic framework for delivering on Africa's goal for inclusive and sustainable development, and is a concrete manifestation of the Pan-African drive for inclusive economic growth. The agreement initially requires member countries to remove tariffs from 90% of goods and services traded in those countries to enable free access to commodities, goods, and services across the continent. The United Nations Economic Commission for Africa estimates that this agreement will boost intra-African trade by 52% in the year 2022. And interestingly, Africa's main goods trading partner is the European Union. Africa exports out of the continent. Their first main export partner is the EU, closely followed by other African countries. So there's already quite a lot of intra-Africa trade. And then in third place, further Africa at 16% of that quantum. And then in third place is China. So Africa is beginning to export quite a bit of their goods to China. When it comes to imports into the continent, the EU leads again significantly as being a big part of where goods are imported into Africa from. This is followed by China at 16% imports into Africa. And then again, imports from within Africa, from other African countries, makes up 13% of the imports on the continent. Thus, the European Union, China, and African countries are well positioned to take advantage of the African Continental Free Trade Area to increase trade on the continent and in the luxury goods sector. So finally, what should investors consider when seeking to invest in the luxury goods market in Africa? Africa needs connectors. And by this, I mean investors who are able to work across multiple countries in Africa, particularly across the regional country clusters of West Africa, East Africa, and Southern Africa. As these countries are already well connected, with this connection expected to accelerate even more with the implementation of the African Continental Free Trade Area. We have seen Africa trade barriers continue to fall at an accelerated pace, and intra-African trade holds enormous potential. From a customer base needs perspective, we've seen Africa consumers' needs change, and customers in Africa are increasingly adopting digital social media and online shopping platforms, which presents an exponentially increasing market for the advertisement and selling of luxury goods. Thus, in conclusion, Africa has already become a substantial market for luxury goods. Thank you.